and of course we know that Marco was one of the biggest bulls on Wall Street last year, and he's talking about, if not a Minsky moment, then we're seeing kind of some of the conditions that look like the Minsky process. Do you think it's going to end with a bubble bursting?
I don't think so. I think this is a very short-term problem that the regulators are going to come in there and they're going to do the right thing. I think with all these bailouts and with the Credit Suisse being bought out, and the only problem right now is like First Republic, which we think there's going to be a solution to it in the next week or so. They can't keep it this way. I think regional banks are important to the U.S. Banking system, and I think that Minsky, unfortunately, the JP Morgan analyst was not right last year. And I think this is maybe a little bit too much to assume that we're just going to have a failure in our economy because of this.
So Laila, let me just kind of gauge how risk averse or not you are. Do you see any value in the US banks at this point?
We do see some value in the larger banks. We are certainly, I'm getting calls every day since all this started with clients that have money in regional banks, actually even money in some of the bigger banks. But people are afraid, and when you have panic and you have worry, and this is their safe money, they're going to take it to the bigger boys because those are too big to fail. And so we're seeing a lot of clients either move their monies to treasuries or move their money into the bigger banks. And so the bigger banks are gonna get the bulk of the deposits, and I think those should help. The regional banks we think are probably gonna continue to suffer because of the lack of confidence. Unless the FDIC comes in and actually increases the amount of insurance on these deposits, people are moving their money first and asking questions later.
Laila, I continue to see more and more of those trades that we saw during the pandemic, where you're trying to get defensive and then you go into these big techs with very strong balance sheets. Is that the defensive play of the year again?
It is for some of the money. I think certainly big tech is a good place to go. They're flush with money. If we are going to see a slower economy and we're going to see potentially the Fed pause here, then big tech with the bigger boys with the big balance sheet and still potential for growth are going to be a good play. And so people are already flocking into that again.
How are you positioning now that we're headed towards the FOMC?
We're thinking that they're going to raise interest rates a quarter of basis points this week. I think they're going to follow with the ECB. ECB, even though with all these problems, they went ahead and raised 50 basis points, and then they're basically saying they're going to pause. We think it's going to be important for the Fed to kind of give the same message, to really say that they're going to pause and see what's going on. They certainly don't want to, they cannot deal with financial distress. They can wait and see inflation. Inflation is starting to come down. We're seeing it all around here for the very first time. I think this banking problems that we have, and the fact that they probably pull back on some of their loans, people are going to pull back on some of their spending. It's going to be disinflationary already, and this is really what the Fed wants. So they don't need to go to battle and don't need to increase interest rate like they were going to. As you know, the market is estimating or a drop in interest rate the second half of the year. We don't really think that that's going to happen, but they're already calling for that. And the Fed tries to follow and not surprise the markets. So then we think they're going to go a quarter basis point this next, and then they're going to pause. And that will be good for the large cap type of high tech stocks to then maybe outperform.